Market update for the beginning of February. Can you believe that we are already through 1/12 of 2026? And I will say this market looks like it's heating up when it comes to the spring selling season. I already have multiple contracts in that had multiple offers on them. And normally, before March, typically see a little bit slower time frame. There's more inventory, but here's the thing: people are out there and they're getting a little bit more aggressive, and the opportunity to actually get something under market is only going to happen if something has already been on the market for a little bit of time. New homes coming on the market seem to be going off pretty fast and at a hot clip. So let's kind of go into a few details of what's going on in the market. So January as a whole, interest rates had bumped up considerably. If you look at this from the standpoint on a 30-day cycle, the 10-year Treasury had gone from about 416 to all the way to 429, which once we break that pivotal 4.2 mark, I was concerned that we were going to stay there for a pretty good amount of time. You can see we tried to get back under that 420 once we broke it, and it bounced off of that and went higher. And then only today, if you look at today, which is the 5th of February, we had a considerable drop of 9 basis points all the way down to 417. And that was a pivotal breaking point on the 10-year. Now, how and why did that happen? One, today unemployment numbers for the week were higher, but two, the news that about Amazon and their layoffs and a few others triggered a little bit of angst in the market, and I think that this here also may be a culprit also, in that a lot of people don't know that Bill Pulte raised Fannie and Freddie's cap. They had them capped at $40 billion on their portfolio. Even though Congress had 450 already allowed, the Democrats over the last 8 years capped Freddie and Fannie at 40. And even though the Congress had allowed them up to $225 billion, President Trump wants them to get into the buying of MSBs with their portfolio, which might not be a bad thing if you think about it, because right now they're limited in how they can manage their portfolio, and this would allow them to maybe make a little bit more profit for all of us also. But they are now bumped up to their allowable caps of the 225 versus 40. So that's $185 billion that both of them have, $370 billion in buying power, and Trump wanted 200 spent. So Bill Pulte, head of FHFA, is by raising those limits quietly about 2 weeks ago, may have also helped push this 10-year down in conjunction with that. Now, a few other things on the economic front. Existing home sales rose 5.1%. New home sales fell 0.1%. The consumer sales up 0.6% in November, 3% year over year. Inflation's still sticking in that 3% range. Case-Shiller home prices rose 0.4%, 1.4% year over year. So home prices are still growing, and the National Home Builder Index fell 5.1% in January. So, their sentiment's a little on the lower side. A couple other things to make mention: Trump accounts. If you have clients, if you're a realtor and you have clients that have newborn children, and as of the beginning of 2025, or they're expecting all the way up to 2028, the new Trump accounts 4547. When you file your tax returns, make sure that you're filing that form. They can get $1,000 that can grow tax-free in these accounts, and these accounts become your kids' accounts when they're 18. You don't have to be in that time frame to actually get an account. And what I think is really cool is the fact that for self-employed individuals or people that own businesses, or if you could talk to your boss, technically $2,500 can be given into these accounts and be written off via businesses. So I think that could be a really good thing. Keep in mind, Amazon, all in the news today about the CapEx spending and layoffs. So that, I think, has the market just a little bit in the jitter situation there. So my name is Kevin Retcher. I am the owner of First Meridian Mortgage. If, in fact, you have a client or you yourself want to make a loan application, right here is the big button on my website, firstmeridianmortgage.com. If you do me a favor, like, share, and subscribe. You're watching The Till, which is truth in lending and in life. I am a Marine veteran, been in business for 30 years, also a independent insurance agent. Just got news yesterday with Travelers that home and auto both took reductions in this last year. So some of my insurance clients are going to be happy that their actual cost of insurance is going down in the coming year. So that's actually a pleasant surprise. So this is a market update. It is 2/5/2026, and I think February and March are going to be outstanding months. As far as rates coming down, there's going to be more refi action going on, and there's going to be a lot of clients out there looking for new homes to buy and resales. If you're a realtor and you have any past clients that took higher interest rates, I specialize in a lot of no-cost refinances. You can check out some of those details on my website. I give some pretty detailed explanations on how no-cost refis should actually be done. Same for VA IRRRLs. Again, my name is Kevin Retcher. I'm the owner of First Meridian Mortgage. I'm here to serve. To all the Marines out there, I'm going to say, Semper Fi. Talk to you soon.